record this session. So, okay. All right. So this session is being recorded so that in case you guys want to go over it again, you'll be able to find it on my YouTube channel. Okay. All right. Before we start, I first want to find out how much do you guys know about Forex? Have you guys done research before in the past?
Yeah.
How much research have you done in the past?
On just some basics of what is Forex.
Okay.
Technical and fundamental analysis, stuff like that.
I see. So you understand things like lots, pips, leverage, and the types of currency pairs stuff.
To an extent.
To an extent. Okay. What about you? Okay, I don't think you can hear me. Jay, are you able to hear me? I don't think so.
Can you hear me?
Yes, I can now. Are you able to hear me?
Yes.
Okay. I hope there's no delay in the audio.
Okay, I think it's reduced now.
Okay. All right, I wanted to find out before we start, how much do you know about Forex? Have you done research in the past?
It's much better now.
Pardon?
Come again? Come again?
Are you able to hear me?
Yes, yes, yes.
Okay, I wanted to find out how much do you know about Forex? Have you done research in this before?
Okay, not really deep researches, but just some basics and how to go about some other things.
Okay,
But there's still some other things that I need to know.
I see. So do you understand things like leverage, lot sizes, pips, and the types of currency?
Lot sizes and pips, I've got an idea,
Okay,
but on leverage, not much.
okay, okay, that's fine. I guess we'll go over everything just in case you've forgotten some minor details.
Okay.
Yeah.
Okay.
All right. So in this package that you guys have paid for, there's two strategies that we're going to be focusing on. Now, both of them are based on fundamental analysis. Now, fundamental analysis is just fundamental analysis is just when us traders trade when there's a news report that's been released to the public. Now, these reports contain economic data like GDP and stuff. It's got things like predictions, and it basically tells you how the economy is doing. So there's stuff. Now, like when these reports are released to the public, when these reports are released to the public, everyone tends to pour money into a certain economy. So, like for example, this event here, Canadian GDP, when it's released to the public, everyone starts investing in this place, Canada. And basically, currency pairs that have got the Canadian currency in it tend to see fluctuations. So a currency could either go up or down, and so on. But anyway, these fluctuations are how to choose to trade as fundamental analysis traders. I hope you guys have understood.
Yes.
Okay. Jay, everything's good? You understood? Hello, Jay, can you hear me?
Yes, I can hear you.
Okay. You've understood what I was saying?
Yes, that the way the Canadian currency moves according to the economic movements. They get affected by the same movements.
Yes, yes. When a report is released, that's when the fluctuations happen, because everyone wants to make money. So when they see that the prediction is going to be, everyone starts buying or selling or whatever, then all this causes fluctuations in currencies. So these fluctuations are what we choose to trade. So that's fundamental analysis. That's what we're going to be focusing on. So the first strategy is called the easy SNB.
Okay.
Yeah, this one is pretty easy to execute. It only requires one trading account when it comes to going about it. Now here, SNB just stands for sell and buy. The whole idea of the strategy is to hedge the trade. So whichever direction price goes will be on the safe side. So the whole logic behind the strategy is to place a sell and a buy. But the way we're going to be doing that is by using buy stops and sell stops. Okay. Is everyone clear? Or should I repeat?
Yes.
Okay.
So you're saying this one involves selling and buying in only one account.
Pardon? Say that again.
Okay. I think this one involves selling and buying.
Yes, we're going to be
the sell stop and the buy stop in one account.
Yes, that's the way we're going to be selling and buying. Yeah, that's the way strategy.
No.
If we're using buy stop strategy, we're not entering the market.
Okay.
We're not entering the market. Okay, Jay, I'm going to
Okay. Okay. Go ahead.
Okay, sorry, I was hearing an echo from your microphone, Jay. So yeah. Anyway, so for the easiest MB, we'll be placing buy stops and sell stops. Now, these types of orders allow us to enter the trade a bit later on. So when we place the order for, let's say, a buy stop, we're not entering the market as soon as we place the order. What it's going to do is it's going to wait for price to increase to a certain point before actually entering the trade for us. Same with the sell stop. With the buy stop, it just waits for price to increase to a certain point. Then for a sell stop, it does the opposite. It waits for price to drop to a certain point before it actually enters the trade for us. So buy stops, sell stops within that single account. That's how we go about the easiest MB. I'll explain a bit more on buy stops and sell stops when we actually enter the other slides on how to actually execute them in MetaTrader. So for now, just remember that it only requires one account, one trading account. Then within that account, we're going to be placing one buy stop and one sell stop. Now, what these do is they tell your broker that wait for price to increase or decrease to this point before placing the trade for me. Now, the distance we're going to be telling the broker to be waiting is 10 pips. Pips, for those who don't know, a pip is just a movement in price. It's how we determine how far price is going to move or how far it has moved and so on. It's kind of like kilometers. It's just a unit of measurement. So pips is the unit of measurements for price, how far price is moving and so on. Now, within each buy stop and sell stop, we're going to be placing them 10 pips away from price's current position. So for the buy stop, our broker is going to wait for price to move 10 pips above price's current position before placing the order for us, the actual order, before entering live for us. Then the sell stop is just the opposite. I hope that's not too complicated to understand.
Yeah, I get.
Okay. Now, what about you, Jay? Is everything good?
Okay, it acts as a delay in the order.
Pardon? Say that one more time.
So that I was wondering, does it act as a delay?
Yes, yes, it does. Except the delay isn't measured in time. It's measured in distance, rather.
Okay.
Yeah. So your broker is going to wait for price to move 10 pips before entering, which is pretty much a delay, yeah. Anyway, that same delay is actually what makes it less effective as compared to the other strategies in this package. We're basically giving away these 10 pips. We're not going to make money from them. We're not going to hence making the strategy less effective. I'll explain a bit more when we reach the next page. Everything is fine so far? Everything is fine so far?
Yes.
Okay. All right, moving on. The easiest MD has got its own list of units. This is the list. There's cards GDP, there's GBP GDP, AUD interest rates, GBP PMI, AUD sales, interest rates, GBP interest rates. Now, these 7 news events, we're going to be using them with the easiest NB only. Now, just like I said before, these are only times when countries release reports to the public. So on these specific events, that's when we're going to be placing the buy stops and the sell stops. Now, on how to know when exactly they're going to happen, I'll explain that in a future slide later on. But for now, just know that this list only belongs to the easiest NB. What I also do at the end of the lesson is I'll send you a screenshot of this slide so that you can be knowing what particular event you're supposed to use with what strategy. Each strategy has got its own list. So I'll send you pictures of both the easiest NB and the extremist NB for these events. Don't worry about that. Before we move on, do you have any questions? Are there any questions? Everything's clear.
Okay, let's see.
Jay, you're saying
Can you just shed light on?
your network is breaking.
I was wondering if you can shed light on what AUD retail sales.
So your network is breaking. Just say it one more time.
Can you shed more light on the GDP PMI?
On GBP PMI?
Yes.
Okay, GBP PMI is just a type of news event that's based in So here on the left-hand side, there's the currency, and the right-hand side, it's actually just the type of investment. For example, this here, CAD, that's Canadian dollar. Then GBP is Great British Pound. AUD is Australian dollars and so on, just like that. The event is going to be happening in Britain, hence the pounds that you're seeing here, GBP, pound. And the type of news event PMI. So it's just the type of news event. So just like the other ones, you're only going to be using the easiest. I hope that has answered your question.
Yes. Okay.
Chileshe, are there any questions before we move on?
No question.
Okay. No question. All right, so moving on. Okay. The next strategy we're going to be extreme SNB. Now, the next SNB strategy. Now, SNB is just sell and buy, just like I mentioned before. The whole point of this strategy is also to hedge the trade. Now, the way we're going to be hedging it is a bit more different as compared to the easy SNB. This one requires 2 trading accounts when it comes to executing the whole strategy. So if you've got an account with Hotforex and just Forex, you'll be using both trading accounts at the same time, side by side of each other. Now, the way we're going to hedge the trade is by placing one buy in one account and placing a sell in the other account. So one account is going to have a buy and the other account is going to have a sell, which is the opposite of a buy. So they'll both be having different or opposite types of trades. There should never be buy or sell. It should always be opposite. One buy, one sell. You're following?
Yeah.
Okay. Now you might be wondering, if you're placing opposite trades, how do you actually make the profit? Like, doesn't that cancel things out? And my answer to that would be no. The way that this strategy works is by using leverage. Leverage is, you can think of leverage as like a loan that your broker gives to you. Now, leverage is quoted in ratios, like for example, 1:1 or 1:5 or 1:100 and so on. Now, when you have a leverage of, let's say, 1 to 1,000, for every dollar that you deposit in your account, your trading account. That means your broker can loan you up to 1,000 times the deposit that you've made. So since you deposited $1, your broker can loan you $1,000. So with $1, you can have the trading power of $1,000. I hope you guys understand it. Now, leverage basically allows us to buy more currency with a much smaller deposit. So like I said, if leverage is 1 to 1,000, if you deposit $1, you can essentially trade up to $1,000 worth of whatever currency there. Now, since this leverage basically gives us more power per trade, we'll be able to accumulate much more profits much quicker than we would if we're only trading with $1. Now, since we're placing a buy and a sell, our whole idea is to lose money in one account. Let's say both accounts have got $50. The whole idea is to lose one account with $50. And in the other account, since we've placed the opposite trades, we're going to regain what we've lost plus much more on top. I hope you guys are understanding. Or should I repeat that one more time?
Just repeat one more time. Jay left.
Jay has just exited the meeting. Let me text him, ask him what's going on. I think let me call him instead.
The mobile subscriber you have dialed is either outside the coverage and
His phone is off.
Hello.
Hello, Jay. I've noticed you've left the meeting.
Yeah, my network was tripping, so I'm trying to reconnect.
Oh, okay.
Yes, I'll be with you very shortly.
Okay, sure. So we should wait for you.
You can be moving at a slow pace, so you want to start again.
Okay, sure. Or if you want, you could reschedule to a time when like your network could be better.
Let me just try.
Okay. All right, you'll find us in the meeting then.
All right.
Okay. I think you'll join when it's about to. Okay, so you're saying that I repeat what I said?
Yes.
Okay. Okay. Let me. How do I put this? The only way that the strategy works is because leverage allows us to accumulate money much quicker than we would if we didn't have any leverage. Now, the way that's possible is because of the same loan that the broker gives to us. If let's say we're using, okay, let's say there's two people, right? One person is using a leverage of 1 to 1, and another person is using a leverage of 1 to 1,000. Now, assuming price had moved only 10% for a particular news event. Now, since the person with a leverage of 1 to 1 only has the power, or rather, how can I say this? Let's say we both have the same deposit, which is $1, but your leverages are different, 1-to-1 and 1-to-1,000. The person with a leverage of 1-to-1 can only buy up to $1 worth of currency. Then the other person who has a leverage of 1-to-1,000 has the ability to buy up to $1,000, but only has the same deposit, which is $1 in this case. Now, since the price had only moved 10% during a news event that both people are trading, 10% of $1 is 10 cents, while 10% of $1,000 is $100. So the person with the leverage of 1-to-1,000 would have made a profit of $100, as opposed to the person with the leverage of 1-to-1 who only profited 10 cents. So like this, you can see that leverage allows you to accumulate more money much quicker than you would without leverage. I hope that's a much better example.
Yeah, I understand now. I understand.
Yeah. Now, since we're using leverage, while we've lost money, that's fine. Because while we're making profit, we're going to recover what we've lost plus much more on top, because we're accumulating money much quicker because of the same leverage. Now, leverage, there's a minimum where this strategy, there's a minimum leverage that's required for this strategy to work. And that leverage is 1-to-1,000. Any leverage that's below 1-to-1,000, like for example, 1-to-100 or 1-to-500, those leverages won't allow you to accumulate profits fast enough for you to recover what you've lost in the losing account. So 1-to-1,000, that's the limit. That's where the strategy starts to work. If you've got a leverage of 1-to-2,000, 1-to-3,000, that's even much better, because you'll be able to accumulate profits even much quicker, and so on. I hope everything has now added up.
Yeah, it's clear. It's clear.
Okay. So yeah, when it comes to creating the trading accounts, just make sure your leverage is 1-to-1,000 going up. Otherwise, you won't be, the strategy won't make sense. You have losses in both accounts, or you have a net loss rather. You won't be able to recover what you lost. Okay, Jay is back. Let's just wait for him to finish the joining process. And we are left with 10 minutes. Okay, that's fine. I guess we'll split this lesson into two. Today, I think we'll just touch on the strategies. Then tomorrow, we can enter MetaTrader 4 on how to actually execute the strategies. Jay is still not done. Okay, I think while he's joining, we can go as far as we can, because we only have 10 minutes left. Anyway, so for the extreme SMB, the most important things to remember is that it requires 2 trading accounts. Then in one account, you're going to place 1 buy, and in the other one, you're going to place 1 sell. So in total, there'll be 2 positions, 1 position in one account and 1 position in the other account, and so on. That's how the strategy works. Do you have any questions so far, Chileshe?
No questions so far. No questions so far.
Okay. One last thing I should mention about the extreme is that since we're dealing with two accounts at the same time, when it's time for the event to actually happen, let's say the event is at 14:30. When 14:30 clocks, and the last account that you are in, let's say you had placed a sale and you're currently within that account. If you see the colors change from gray, not from gray then, from red to blue, that means that account that you're currently in, that's where the profit is going to be, and that's where your focus should be. Don't bother changing, switching apps to go see what the other account is doing or how it's doing rather. Because if you're in an account where there's blue, that means profit. And don't bother going to check up on the other account. That account, that means you've lost money. Because if in here there's profits, that means the other accounts where there's the opposite trade, there's obviously going to be a loss. So yeah, if you're already in the account where there's blue, don't bother switching. But if you're in the account and you see that the event has clocked and it's still red, that means you are in the losing account. By you seeing red everywhere, that means you should know that in the other account, since you had placed the opposite trade, there's obviously going to be blue going on in there. So when you see red, quickly switch to the other side and you see blue immediately. Now, the moment you see blue and confirm that the event has clocked, start closing the positions immediately. Don't wait for your profit to keep increasing or anything like that. Don't get greedy. Just close immediately you see blue. The reason why you close immediately is because price does reverse. So you can find from like $1,000 profit, while you're waiting for it to go up in profit, it might reverse instead. And from $1,000 profit, you now have $50 worth of profit, which is a very sad thing to, to experience. So yeah, the moment you see blue, just close immediately, take what you're given, and don't get greedy in short. I hope that has made sense.
I get you. It makes sense.
Yeah. So I think for today, this is how far we're going to go. Then tomorrow, we'll enter into the practical side on how to actually execute the trades and so on. For Jay is still experiencing network issues. I think we'll just continue again tomorrow as well. I'm not really sure if his network will be fine tomorrow this time.
Same tomorrow.
Pardon?
Same time tomorrow.
I think with you, same time, yes, because we're not experiencing the network issues, but with Jay, I think it would have to be earlier.
Okay,
Alright.
I think I'm back now.
You're back now.
Yes, yes.
Okay, Zoom is even telling me the time left is a few minutes only. So I think we'll just continue the session tomorrow.
No. Okay.
Yeah, but from the stuff that we've gone through, Jay, do you have any questions?
On which one?
The slides that we've gone through. We've gone through 4 slides today so far. Do you have any questions?
Okay.
For any of them?
Okay. So on the first one, I'm very much yeah, on the easy SNB, I'm okay. I'm 100% okay with it.
Okay.
Okay.
Then on the extreme, how far did I go with you before your network started interrupting?
On close the account which is in profit.
On close the account which is in profit.
Okay. Yeah, I just want you to shed more light about why it says close the account which is in profit. So that means whenever we trade, the other one buys and the other one sells.
Yes.
Are we supposed to wait for it to make maybe as twice as much, or how do we gain in terms of this one?
Okay. When I say close the account which is in profit, what I simply mean is that, let's say, since there's 2 trading accounts we're going to be focusing on, right?
Yes.
And the last order that you placed was a sale. And that's the account that you're going to be in, because that's the last one you're last in. Now, in that same account where there's a sale, if you see that the event has clocked and the account that you're currently in stays in red, even after the event has clocked, just know that that account is the losing account between the two accounts. Now, since it's the losing account, what you're supposed to do is quickly switch to the other side, and you're going to see blue immediately. The reason why you're going to see blue is because you placed the opposite trade. In this case, buy. Yeah, so where there's a buy, you're going to see blue. And the moment you see blue, you close all the positions immediately. You're not supposed to get greedy or wait for your profit to increase some more, or even just a bit. You're not supposed to do that because price does reverse. Because in as much as you might be expecting price to continue going up or continue going down, it might reverse instead. So for example, $1,000 profit that you had, it might drop to $50 only, which is going to suck for you. So the moment you see blue, just close instead. Don't get greedy, don't get selfish or anything like that. Just close and get whatever you're given. Because by the time it's 10 blue, it's most likely reached its maximum height or maximum depth. Yeah, I hope that has answered your question now.
Yes.
Yeah, so if you're in the losing account, switch to the other side. And the moment you see blue, start closing immediately. But there's some cases where, like, in the account that you're last executing the trade from, is the account where there's going to be profit. So when you see that the event has clocked and your trades go from red to blue, that means the account that you're in is the winning account. That's where the profit is going to be. Now, since there's obviously blue in here, there's obviously going to be red in the other one. So there's no point of us going to check it. So all your focus should already be in the account that you're currently in. And the moment you see blue, you do the same thing. You start closing immediately and so on. No greed, no selfishness, just close the moment you see blue.
Okay, so when executing
okay, so I think tomorrow we can meet for the second session at the same time at 18 hours, if that's fine for both of you.
Yes.
Okay.
18 hours up.
So 18 hours, I'll send you guys both the links, then you can control things from there.
No, okay.
Okay. If you have any questions, just let me know on WhatsApp, so I can push them to tomorrow's session.
Okay, all right.
All right, guys, have a good rest of the day.
No, thank you very much.
Thank you.